Hello Web3 TV friends, my name is Ornella Hernandez and today I am live from the World Finance Council in Dubai. I am joined here by one of the attendees, Sameer, who is the CEO of a company called Revfin. How are you today?
Very well, thank you.
So tell me why you're here today at the World Finance Council.
We are here basically to, I was a part of a panel discussion at the World Finance Council where I spoke about the future of Fintech and focused a lot on talking about how Fintech is really helping in financial inclusion. So that's basically the main topic that I've been discussing.
Okay, and what does financial inclusion mean to you?
Well, I always believe that Fintech generally, the main role is to create a huge social impact through innovation. And one of the largest or one of the biggest problems that the world has today is a lot of people are excluded from basic financial services, financial products. And the idea is to get access to those products to such customers or individuals.
Okay.
That's what it means. And a lot of, as an example, a lot of the customers that we serve at Revfin are financially excluded. They live in very small towns, geographies that don't have access to traditional financial services, people who have no credit history, so banks don't tend to give loans to them.
All right, so give me some examples of how you help out these people.
Yeah. So as a business, we primarily provide loans to people for them to buy commercial electric vehicles, which means that they are buying electric vehicles, two-wheelers, three-wheelers, to earn a livelihood.
Okay.
Right? A lot of these vehicles are used in fleet operations like food deliveries and things like that, or for carrying passengers around.
Right, I see. So someone who wants to have his own vehicle, could be a car, could be a bike, maybe?
It could be a bike.
But electric?
Electric.
You focus on why?
Yes. So there are two, I would say, main reasons. One is that generally we see a lot of shift happening towards electric vehicles. I believe that when we look at the Indian market, already about 55-60% of three-wheelers being sold in India are electric. And I believe that shift will completely happen in the next 2-3 years, similarly with two-wheelers. So it's a growing industry, it's a new industry, and I think that why focus on a dying industry, which is ICE, rather than focus on newer industries. Okay. That's one. But also, just from a commercial vehicle standpoint, the kind of earning that the driver makes with an electric vehicle is actually far higher than what he makes with anything else.
How so?
So one is because the cost of running an electric vehicle is much lower than an ICE vehicle. So you have a lot of saving in fuels and maintenance of vehicle and so on and so forth. So the net take home is much higher.
What about the time that it takes to charge them?
I don't see that as an issue.
Okay.
What we see is that a typical driver that we have operates the vehicle for about 70 kilometers, that's 50 miles a day. And most vehicles on full charge can do more than that. They can probably do 70-80 miles on one full charge.
Okay.
So the driver does not necessarily need to charge vehicle during runtime. They can do it in the downtime, overnight and things like that. And even if the vehicle requires a charge in the middle of the day, you can charge for 10-15 minutes to top up. Right?
Yeah.
So it's not really disruptive in that sense.
Okay, and where are most of your users located?
Most of our users are, spread across India, but mostly in small towns.
Okay.
So 96% of our users live in very small tier 3, tier 4 towns in India. Yeah, so we've really gone deep into semi-rural geographies in India.
Okay, I see. So this is a type of loan it's a commercial loan in a way, right? Because they're using this asset to work.
Yeah.
Correct. Okay. And what else in the fintech space do you think, besides giving loans to the unbanked, is a big topic right now in the fintech world, or something that you're looking at, something maybe that you're excited about for this coming year?
No, I think if I just look at the whole sort of process of data generation and data use, and the use can be through artificial intelligence or through other technologies and algorithms, but the whole process of data generation is amazing according to me. Today even as an organization, we generate hundreds of millions of data points about users all the time. I'll give you an example. We embed telematics in all the vehicles that we finance, which means in real time, I know where our customer is, how they are driving, whether their vehicle is being charged, whether it's moving around, what's the speed of the vehicle, are they doing any sharp turns, sharp braking. So a lot of vehicle information, but also driving behavior information.
Okay.
Right? And when you think of it, we are a lending company, right? In a traditional lending company, you would just wait for the customer to pay those monthly installments, and you would generate one data point from them every month. But now we are generating millions of data points every day with our users.
And what do you use that data for?
Yeah, so that's where it becomes more interesting. We use that data for several purposes. One is to look at how the drivers are working, how they're performing. I know if a driver drives his vehicle because it's a commercial vehicle, he's going to earn money. If he's going to earn money, he's going to repay my money. Right, so that helps us in predicting whether we're going to get our money back this month or not. That's one.
Okay. We track them.
Right. The second is that we look at vehicle performance to see which are the good vehicles, which are the vehicles we want to finance, which vehicles we don't want to finance. We can also start predicting when the vehicles are going to require servicing. That's important for me. Why? Because if the vehicle is not operational, the driver is not making money.
Right.
Now, I'm a financier, but I'm also thinking of how to keep the vehicle roadworthy. Right, and finally it helps in keeping the vehicle secure as well. So if you start seeing abnormal activity in the vehicle, suddenly it starts running at 11 p.m. You know there's something wrong, and if the driver is not normally used to doing those things, so you can alert the driver and say, hey, maybe your vehicle is being stolen at the moment.
Oh gosh, yeah, I guess. And so, will you ever consider maybe integrating digital assets or crypto or blockchain technology at Revfin?
Yeah, I mean, in some ways we already do that because all our loans are done through a digital application, and we have a lot of algorithms, artificial intelligence algorithms behind making those decisions. But certainly, I think, I think crypto, blockchain, etc. I think those are good things to put in. I think it's a bit early for that, but at some stage, yes, because I think for that to happen, though, there has to be a very broad-based acceptance of such technologies. Yeah. So today, use of blockchain is very limited to very small set of users. It has to become, in some ways, governments or regulators have to adopt it across the market to make it that applicable in financial services.
That's the goal. I agree. All right. Well, thank you so much for your time today, Sameer.
Thank you, Ranela.
All right, well, that was Sameer, the CEO of Revfin. Please stay tuned for more interviews coming out live from the World Finance Council today.